Welcome back, everyone. Michael here with Offshore Citizen. One of our viewers, Ivan Jaros, thank you, Ivan, I hope I didn't mispronounce your name, was asking a question in the comments on one of our other videos pertaining to the exchange of information to his home country and what were the different mechanisms by which that would happen, etc. And so I figured I would make a video and explain to you a little bit about how different treaties work, the mechanisms for countries finding out about what you have going on abroad, etc. So we're going to dive into that today. Before we do, if you haven't already, please hit the subscribe button, hit the all notifications. I really appreciate your support. Thank you for doing that. It really helps us to grow the channel. If you like the videos, please share it with your friends. And if you would like help on these things, international tax optimization, asset protection, forming companies, opening bank accounts, getting residencies and citizenships, investing abroad, etc., please reach out to me. You can book a call, calendly.com/Michael-Rosmer. There's a link in the description below. Or you can send a message through our websites, offshorecitizen.net or offshorecapitalist.com. Okay, so today the big deal in the world is FATCA and CRS. What does this mean? CRS is the Common Reporting Standard. FATCA is the Foreign Account Tax Compliance Act. Essentially, FATCA applies to the US and CRS applies to everybody else. That's loosely speaking. Technically, not everybody has signed on, but basically everybody who you would want to deal with has signed on. Now, these specifically apply to banks, okay? And these are mechanisms by which banks automatically share your information with other countries, okay? In particular, your home country. So in other words, you'll notice there's forms when you open a bank account. Are you a US person? And if you are, then they're gonna share the information with the US. And then in the case of CRS, what's your country for tax purposes, your tax residency, and based on that, you're going to write whatever, and that's where they're going to share the information with. Loosely speaking, there's slightly more to it than that, but that's the basic idea. Generally, these disclosures do not happen in real time. Usually, they are reported once a year, and you can go and look up the details of what all gets reported. Mainly, it's that you have an account and what the balances are. So that's kind of the basic idea. And that was a big change from what we had historically, because we've, for a very long time now, had information exchange, but not automatic information exchange. Okay, so one of the questions in the comment was, can the country go and request information? Because what if I'm living in, or let's say that I'm banking in, let's say, Bulgaria, and I say that my residency is in Panama, and so they report to Panama, but really my home country is Australia. How is Australia going to find out, right? That's kind of the basic question. And of course, there's a certain amount of information that they can correlate using big data, etc. But the other thing that they can do is they can actually request that information. They can say, hey, we have this citizen resident, John Doe, and his wife, Jane Doe, and we think that they're banking and not reporting it in Bulgaria. Please send us the information on them. And this is the mechanism that happens typically through what's called a tax information exchange agreement. So I'll do another video kind of describing the differences between different types of treaties in that regard. But the point is, tax information exchange agreements work on request, okay? Now, the network of tax information exchange agreements is not that large. Okay. In other words, there's a reasonable chance that the country that you are from does not have a tax information exchange agreement with the other country. And in fact, we used to do planning specifically around, countries that had the least tax information exchange agreements. Okay. The problem is there's actually a mutual convention. And so basically the way that this works is you have a whole bunch of signatories, like I can't remember the number, but like 100 of them or something, a lot. Most of the countries, again, that you would be interested in. And they have all signed up onto this one common treaty, and this allows the mutual exchange of information, therefore kind of not needing individual tax information exchange agreements. So that's something that is worth being aware of, is that you might say, oh, we don't have this agreement, so it's fine. Well, yeah, maybe you don't, but then you have this other thing, right? So that could result in having information exchange, right? Now, the mechanics of them doing that are fairly cumbersome. It's not a very easy process between most countries, okay? Because of this, if you go and look, there's relatively few information requests submitted on an annual basis by one government or another. Depending on the country, I remember looking at it and be like 300 a year. So, you know, depending on how many citizens you have, that could be, you know, a reasonable number or extremely low. But the bottom line is it's generally not very high. On top of that, the ability of certain countries to comply with those is low. So for example, this was one of the things with Vanuatu, is even though Vanuatu had some tax information exchange agreements, they were such a mess locally that they just had no ability to comply. And in general, there have been some cases where countries have been kind of, they drag their feet, they kind of resist sharing information. That's one of the things that has led to kind of this increased international pressure. And I think what countries realized is they weren't so able to bully other countries, but they were able to bully financial institutions. And as a result, this led to the Common Reporting Standard, etc. So that's something else. In addition to that, of course, if they want to, there's various different ways that they can do investigations to try and ascertain certain information. Usually it's via transactions, right? So you'll have done transactions, and those transactions, like where did the money come from, where did the money go to, etc. And you can kind of follow a bit of a chain to try and determine what's going on. Is that necessarily going to work? It depends, right? But it is certainly an option. So this is more or less the ways that governments will by default go and actually look for information, okay? Obviously, you know, once they start investigating you, they can start requesting whatever from you, right? In theory, they could request your emails, they could request whatever. Somebody was asking the other day about if you've been managing and controlling a foreign company from your home country, how will they know? How can they ever prove that? It's like, well, they can prove it with via travel, via emails, via telephone call information, etc. Right? In that situation, you're going to have to furnish a burden of proof that you were doing it somewhere else, and that's going to be quite difficult in a lot of cases. The last thing to note is that, of course, we have all these leaks, right? We have the Pandora Papers, we got the Panama Papers, we got the Lux Papers, we got et cetera, et cetera, et cetera. And governments will comb through these kind of whistleblower data leaks and use that in order to get some information as well. And I mean, countries like the US and Canada specifically have whistleblower disclosure lines. The guy who basically ratted on UBS to the US government ultimately got something like $300 million paid. I think it's a 30% reward for that. So very, very high if the stakes are high enough. Now, they won't pay out on low cases, and you have to have really specific information. So, you know, it's not a huge thing, but it definitely, I remember there was a time when I had emails sent to me, I don't remember by who, but they were saying, hey, basically, rat on people now because before somebody else does and you don't get the money. Like, this was literally this marketing campaign they had, which is pretty terrible. But, you know, that's is what it is. Anyway, I hope that helps. Hope it gives you an overview. If you have questions about it, put them in the comments below. And I'm going to look forward to seeing you guys on the next video.